Hello, Wyckoffians. Welcome to a distribution workshop on power charting. This is going to be a skill building workshop, integration exercise where we're going to bring together the various components of the Wyckoff methodology into a complete whole, a methodology that has the essential elements for being able to do analysis on trends, accumulation, distribution, and so on. So this really is a workshop for us Wyckoffians where we're trying to build our skills. If you're new to Wyckoff analysis, this will be a great introduction, I do believe. So stick with us and see what you think. So today's agenda is that it is a focus on distribution. It's a distribution workshop, but you'll see it encompasses really the whole idea of the Wyckoff method. We're going to talk about some advanced topics, putting those all together into a complete whole, and then distribution case studies with the time that we have left. Here we are looking at the triple Qs. I want to make the point here that because I'm doing a Wyckoff workshop does not mean, well, on distribution, does not mean that I'm bearish at this point. As a matter of fact, just in the last episode, we talked about the oversold condition and some of the breadth indicators that we like to look at and how they were not only oversold, but starting to turn upward, and that we believe that it could lead to a rally in the market. So in fact, that's exactly what's happened. And you can see on this point figure analysis, this is intraday triple Q, 3-box reversal point and figure. We're going to do a point and figure analysis of the potential objective of the structure that's been formed in the last month or so in the triple Qs. And here you can see across here the count line, two segments are counted here and here. These two segments give us two potential counts. The first one being 349 to 360. Currently, we are at 334.63, and that was as of Thursday the 8th intraday. And then the larger count goes 403 to 413. That is really a significant rally potential from here. Things have to happen to make that so, but I want to make the point that we go with the flow of the market. We let the market tell us where it wants to go. And a couple of weeks ago, when we did the first part of distribution, we wanted to make the point that there was some reason to be bullish for the market. Here you can see this really high volume on this catapult wall that we have here. And it has taken us up to the prior high area, where it may need to stall and do some work, maybe back up for a few sessions, and then have the potential to continue on. So I just want to make the point that there is a bullish potential here. Now let's talk about the Wyckoff price cycle and think about that point and figure chart as we do this. We have the cyclicality of the Wyckoff price cycle that occurs intraday, daily, weekly, monthly. And so we normally think of this as being the classic normal business cycle, but it can occur over smaller periods of time also. The key is that you're going to have a preparation phase of accumulation. And then you're going to have, from the accumulation, you're going to build a count or a potential that is going to result in a markup. We can count that with a point and figure analysis that takes us up and gives us a count potential. Once that count potential has been fulfilled, and we can get a few of those along the way, on the way up, is that we're going to go into an overbought region and a distribution area where distribution forms and results in a markdown. And we're going to look at those today. So two schematics that we're going to look at. There are certainly more for distribution, but these are sort of classic. One shows an upthrust after distribution occurring in what we call phase C, which is the final testing phase of the highs before the markdown begins. In the distribution schematic number 2, we have a last point of supply occurring in phase C, where you get a rally. The rally fails to achieve the previous highs, and then it turns down into a markdown phase. Something I want to make a point of on distribution is that you have, during distribution, increasing volatility. Now, why is this happening? So volatility will tend to become greater in each one of the reactionary phases as you go along. That is because the essential effect of what's happening is that these large informed interests, we call them in the Wyckoff vernacular, we call them the composite operator. These are operators that can buy very large amounts of stock. They are super skilled at what they do. Not all institutions are composite operators. Very few numbers of people, that really the very peak of the bell curve, are the people that are composite operators. And we want to think like and act with them and move with them. So here you can see volatility increasing, and that happens because the composite operator is systematically selling their position that they have, which is a very large position. And you have to remember there's a number of composite operators that are operating in the same space. And so they are all competing with each other to sell stock. This puts stock persistently into weaker and weaker hands. What causes a markdown is stock is in weak hands. As a matter of fact, we say that stock is in the public's hands. The public is a weak holder, and they will hold stock all the way down as we think about that bell curve in the prior chart. So we want not to be among the member of the public that is holding these stocks for very long downward trends. And so this is the reason Wyckoff taught this, was because Wyckoff did not want the public being exposed to and affected by these large downtrends that occur in cyclic declines. So here you can see same concept here. You have ever increasing volatility all the way through. Large amounts of volume comes in on the breaks. That's a telltale sign that the CO is selling stock not only on the way up, but on the way down, and they are systematically selling their shares. So you can go read this blog and read more about it. This schematic is that same concept of the business cycle. You can see that during accumulation, and excuse the fuzziness here, but this is still an exceptional chart that we can use to make a point. Accumulation is the systematic absorption of shares. This is the purchase of shares over the course of the accumulation. As a matter of fact, support, as defined by the support line down here at the selling climax low, and then there's an automatic rally. That support is drawn here, resistance here throughout this period. Give me a second. Stock is systematically going into strong hands during accumulation. They do this carefully, stealthily. They are accumulating shares in a way that does not make the stock go up on them until they have their entire position. Now, the problem is that these are quality stocks that are being bought at good prices. So the thing about the composite operator is not only a systematic and good accumulator of shares, but they are buying shares in the value zone. And that is what this is here, is the value zone. They will hold these shares for the duration of the uptrend. This uptrend, even though it's truncated here, can last for years and years. And so along the way, there are reaccumulation structures that form that are very important to Wyckoffians, because we want to identify and accumulate additional shares with the composite operator on the way up. We literally follow in the footsteps of the composite operator, and we can see their footprints through the way that price and volume is behaving during accumulation, during markup, during distribution. Now, here you can see in our schematic an overbought condition at the top of the channel here, as we are seeing this stock or this index emerge into its overbought and final upward stride, upward condition. Now, this overbought condition is then rejected, turned back into the channel, and you can see at the buying climax a very sharp, swift acceleration of prices above the channel, and then a failure back into the channel. And this is the beginning of the distribution process. We can see this unfolding, and I'll show you examples in a minute. I'm going as quick as I can. Distribution shows that volatility is growing ever higher all the way through here, and a general breakdown of prices eventually occurs. The CO just cannot hold the price up any longer. They will trade in such a way that they will not drive the price down on themselves. If at all humanly possible, they are selling huge numbers of shares, and they're selling them small batches at a time because they are selling them to the public. Wyckoff used to talk about this as being buying wholesale down here, selling retail up here. And so they need to get, if you think of the retailing concept, they buy wholesale, they need to get a markup, and then they sell on at these prices up here, possibly at sale prices, to try to get their inventory sold out. So there is a reason for everything in the financial markets under the Wyckoff method. There's a reason for accumulation. There is a backstory to why accumulation is happening. There is a reason for the markup and a reason for distribution. Prices can mark up easily and for a long time because stock is in such strong hands, and these large holders of shares will not sell them. That means that supply and demand is such that there's very little supply, and a very small increase in demand will cause prices to rise dramatically because there's a scarcity of shares. Up at the top during distribution, there is an ever increasing supply of shares. And this actually causes the volatility and the increasing volatility and over a short period of time. As a matter of fact, you will see here as we look at this that distribution can form very quickly. It's almost shocking how fast you can build a count of distribution, where accumulation can take a long time. And you will see generally, look at the volatility here. Each one of these waves down is really less. And there's a spring at the end in this example, but the volatility is really quiet as you go deeper and deeper into accumulation, because the stock is becoming ever more difficult to buy. So this is what's happening. So these, even though accumulation and distribution look similar, just flipped over, distribution is the opposite concept from accumulation. So let's look at, in this case, an ETF. This is TAN, and I want to make the point here that in the case of the solar ETF TAN, that there is a beautiful uptrend. Remember what I showed you about the upward trend stride or trend channel. Notice the overbought condition over the top of the channel here. And I've done workshops on how to draw Wyckoffian trend lines and trend channels. So do check that out. Here is the climax. Notice there's a gap and a gap, a throw over at the top of the channel, and then distribution forms in tan across here. And this distribution results in a rather sharp break of the ETF tan as it goes down and out of the upward striding trend. So here is where we integrate. We're integrating point and figure. This is a really cool chart. Now, this is actually 2-point scaling. This is a modified chart, 3-box reversal. So down here, this is all very sort of truncated data from here over, but notice 17 columns across here times 3 times 2. There's 102 points of price potential in this accumulation that goes from 2020 all the way back to 2012. And so this is in the yellow shaded box, gives us a count up to, look at this, 114 to 124. And there's a rise and an acceleration right into this price objective. This is a beautiful integration of concepts. We have accumulation, markup, we have a count, we have count potential. It shows a huge potential for higher prices that occurs very quickly because look at all this volume. There is good demand and scarcity of shares. And so the price rises quickly. So now what's interesting is look at the distribution. Here's a small distribution, 5 columns across, counts down to 94 to 86. That's exactly where it went to. Well, it went 2 boxes below that. Pretty good count though. And we have a larger count here potentially that goes even further. Excuse my penmanship, but this shows that there is further potential. Now notice very big volatility and huge volume on the break distribution. Also, we are seeing an inability of TAN to be able to lift or rally appreciably back up into the area of distribution. Not to say that it can't happen, but so far it's not trading dynamically in a rising way with the market, which we just showed you is rallying. Here is that accumulation area, 2020 back to 2012, the shaded area, and because we did a modified point figure, we were able to compress all of this data into that point and figure chart that we just looked at. So the interesting part about TAN is this whole area here could represent even bigger accumulation. So we will watch and see what happens over here to TAN and whether or not it can build a larger count for a bigger move. Now here is Ballard Power, same idea, same concept. We think about the accumulation structure, which is right here. This actually goes down to $1. This is 1/2 point scale. Here is your accumulation area. This is where value resides for Ballard Power, is in this area of this yellow shaded box. Here is a count. We've taken a very large count across. This count goes back from 2020 all the way to 2005, a very large period of time captured on this modified chart of point figure count. Here's a reaccumulation count here after it jumped out and backed up. This is very similar to that schematic we just looked at, that big cyclical schematic with accumulation and distribution and so on. And we have a count here, 4750, and I just took it from the low. I didn't take a range, but you could probably add another 6 points to this for the top of the range. 47.50. Now, so far, this count has only gone to 42. And here, this count goes 43.50, so it missed it by a point and a half. But what's important here is notice that we have an acceleration of prices up into an area with distribution. This is the distribution schematic that has an up thrust at the conclusion, and after the up thrust, notice the complete failure of prices. So we actually have diminishing upward thrusts on the way, an up thrust after distribution, and a failure, and that results in a cascading volatile price decline that goes all the way from $42 down to 20 and a half. Oh my gosh. And here we can take this count. We count from this area here across. It gives us a count down to 23, very close to the final low at 20 and a half. And so very quickly distribution formed. And once it forms, this is really important, is that distribution forms quickly, and then the markdown happens quickly. And why is that? I can hear you answering the question, and that is because stock is in weak hands. This is the reason as Wyckoffians that we endeavor to always be in the footprints of the large operators. We want to follow them, do what they're doing. We're able to buy shares because we do not buy in the quantities that they do. We can buy shares and follow along with them and participate in their campaigns. Now, here is Bitcoin, and also here as a proxy, Grayscale Bitcoin Trust, GBTC. And I want you to see the upward push, diminishing strides here, big acceleration into a climax, another acceleration into another climax, and now you have a rally to a lower high, slightly lower, but this reminds us of one of the schematics we looked at. Now, does this mean Bitcoin is done going up? Not at all. There's a very large structure of accumulation here. Think of our accumulation markup distribution markdown concept. Well, I've shown you this chart before. This count went from the cyclic low 2020 back to 2018 and counted up to 59 to 67 from a low of $4 and a count line of $12. Substantial rally. Look how easily and quickly Grayscale Bitcoin Trust goes up along with Bitcoin. They really are highly correlated. And this count goes up, and look what happened. We got right up to $58, missed it by one box. And then there was a quick and sharp failure downward, and then the rally to a lower high. That is this area here. So a lot of volatility. And that's this area right here that we're looking at on the Grayscale Bitcoin Trust on this weekly chart. But is there the potential for a much bigger count that goes 104, 113, and then 179, 213? Time will tell, but we don't know if this is distribution or the reaccumulation type structure still ahead of us. And we've talked about reaccumulation. Maybe we can revisit that later. So here are other examples. I will go through them very quickly. Just know that you can go study these by looking at my old blogs. Here is a buying climax with a big gap in Keurig, and then a very sharp reaction to an automatic reaction low, sets the range, accumulation, or support, resistance, an upthrusting action, and then look at the failure here. Just a very sharp failure, volumes expanding. The rally off the support area is very poor. This is called the ice, and then it just breaks down and cascades lower. Morgan Stanley, now by the way, this is back in 2012. These are historic examples. And so Morgan Stanley, you can see buying climax, automatic reaction, very sharp reaction, very large. That tells us that supply is present. Sellers in large scale are selling stock. Upthrust can't hold, it's tested and then fails right back to the bottom. Now, we talk about volatility being ever increasing. It's exactly what happened right along here. This volatility is high, this is higher, and then this decline is even higher. I don't necessarily recommend short selling for people because look at the wicked volatilities here as it pushes up. There's very sharp rallies. These sharp rallies are used by the CO to sell stock. It can be very difficult to weather as a short seller these sharp rallies, which can make it very easy to get out at the wrong time. And so, like I said, I don't necessarily recommend short selling for most people. It's a very unique skill. Here is a buying climax in network appliance, of automatic reaction, range bound condition thereafter, upthrusting action, a minor distribution forming here. This happens all the time. Then a very sharp volatile decline, a rally up to the midpoint. This is a big sign of weakness. Another very volatile decline, another really volatile decline. And this is in 2008 during the Great Recession. So you can see you do not want to be holding the bag in these epic downtrends. Micron technology, big upthrust after distribution and a secondary test. Weekly chart, a huge failure. Look at the volatilities get ever larger, and then on the ice, no lift, and then just an outright failure. So go check these out in these blogs. Here's Akamai 2007, huge distribution. You can go ahead and study this as you have time. ISRG, same thing. Huge distribution, lots of volatility. You can see the volatility in the supply and the sellers, the large institutional and composite operator sellers engaging the stock and taking it down. And here is a cyclic accumulation. So this would be at the bottom of an important accumulation area where value is present in Biogen. Beautiful accumulation that goes back from 2011 to 2008. Here's the point and figure count. 5-box reversal, modified method, 1-point scale. And you can see here that this count goes up to 153 to 161 up here, and it's still continued to go higher. Huge potential. Now looking at this here's Biogen again. Here's a very large accumulation that goes from 2012. We just looked at this area right here. Goes back from 2012 to 2001. And this is a large count. It's a reaccumulation structure. Look at the volatility diminishing all the way through. It's so large, people didn't even notice that it existed because it was so big. They don't take the time to look at, this is monthly bars. Look at the big monthly data because you can see the accumulation developing on very large structures, and then it takes off. Look at this count. This count across here modified, this is our last chart for today, takes us up to 395 to 415. Huge count. Count lines at $40, the lows at $20. That's a huge count. Here is the point and figure objective right there. It's gone up. It hit almost perfectly that $400 level. And then here is biotech ETF, and you can see the distribution forming. Go check this out in the blog Way of Wyckoff. Thanks so much. Time to go. We'll see you next time.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.